pessimism may continue for a while. Jay, you have to track it on a day-to-day, on a minute-to-minute basis. In fact, what's the sense you're getting right now? Because yes, there is selling. Yes, there is broad-based selling, but the quality names are going down in a big way. I mean, 12 to 13% on a Reliance in 2 straight trading sessions. What does that tell you about the breadth of the market? And of course, if the jewels like Reliance, if TCS, if ITC, HUL start falling significantly, then are we looking at a deeper sell-off?
Good evening to you, Dipanshu. Dipanshu, if you remember the last conversation which I had with you on your show, I said that market is likely to see a correction, Dipanshu, of almost 5,000 point rally, which started from February 2016 until the recent highs of 11,787, 800 levels, and I clearly mentioned that a 5,000 point rally is over and we are likely to see a 40% correction of the same, when Nifty is likely to test 9,800 to 9,900 zones, and we are seeing that happening. Yes, of course, that's happening too quickly, which no one anticipated, but I think that those levels are likely to come. Now, in that case, the 3-year bull market has gotten over, which will bottom around 9,800. Dipanshu, if the way the question of yours is that in this kind of a breath, in this kind of a fall, wherein the large caps have started to decline so much, so if the fall gets arrested at 1900, that's fine. But if the global sentiment also negates along with that, then I would fear that not 3 years of bull market is over, but 7 years of bull market is over, which started from the bottom of 2011, that is 4,500, till the recent highs of 11,800. In that case, the minimum 40% retracement target comes to 9,000. So either there are two bottoms, either it is 9,800 or 9,000. Either one of these, I think market should bottom out.
It's a similar level that Ashish and Jay are talking about. Definitely, you are in danger of breaking the 10,000 mark. And if you see the swift nature of the selling in the last 2 trading sessions at least, then essentially that could come under pressure as early as the middle of next week. Of course, that remains to be one view of the markets. Ashish, let's talk a little more stock specific then. And, while I can talk about OMCs and the oil and gas names, I really want to talk about Reliance Industries, because in the fall till at least Wednesday, Reliance had been one of the outperformers in the sense that it really hadn't fallen much. From 1,300, it had gone down to about 1,250, 1,200 odd. But from there, the selling in Reliance has been very, very swift. I mean, this week itself, Reliance has lost almost 17%. Real danger of losing further from here, and of course what it does to the markets is a separate thing, but is Reliance in big danger at the moment?
Yeah, I think so. In fact, the day before yesterday also I had mentioned that Reliance has breached 1,200 and 1180. If it gets breached on downside, you will see 1,040, 1,015, exactly there we are today. Now where next? So if you look at 2 trading sessions volume, it is almost on an average 2 crore shares per day. As compared to average of 70 lakh shares. So it's a huge volume based selling which we have observed in Reliance. So I think at least in a shorter term, medium term view, 990 to 950 is something which one can expect in Reliance. Around 950 there is a possibility you might see some stability coming back to Reliance, but definitely from here on I'm expecting another 80 to 100 rupees dip from current levels. Yes, it might take some time because after 2-3 days of sharp fall there can be a pullback. But what is more important is that in this pullback, if the stock doesn't crosses 1,100, then I think this pullback or rally would be sold off.
All right. So another 8 to 10% sell-off is a given in Reliance Industries. Maybe you'll see a pullback, but essentially at very precarious levels for a Reliance. In fact, Saurabh, before I take a break, I just want to talk to you about the oil and gas space. We all know what's happened with the oil marketing companies in the last 2 days. They have to absorb a 1 rupee per litre amount on fuel prices going forward from here. That essentially is going to hit their earnings significantly in the 3rd quarter onwards. But because of that, concerns have also come in on the upstream majors, because previously GAIL and ONGC also used to bear some of the subsidy burden. In the future, are we likely to see that? And is that why the reaction has been so adverse for these names? And again, on a Reliance, which also has fuel retailing operations, although they contribute to a very small part of their overall balance sheet, but essentially they too will have to cut prices if they are to compete with the OMCs. What's your view?
I think the government can pinch on the balance sheets of the upstream oil marketing companies, and that is which and that case is very much strong given the fiscal mathematics we have now, and the government can actually put pressure on the ONGC and GAIL, and the market worries are actually reality. That is why we are seeing that the price correction has happened, because if that happens, it would seriously cut down the profitability, and in the oil marketing companies case, there would be a pressure on the margins, profitability close to maybe 30-35%. That is why we have seen good amount of reaction. Reliance is finding a new place. I think it's been quite a while that we haven't seen correction coming in the Reliance industry. I think it is because of the general correction and pessimism in the market that maybe some funds have offloaded the stock Reliance industry in line with the general selling in the market. I think it doesn't Reliance has not fallen necessarily because of the 1 rupee pinch which it might get in the retailing business.
All right, definitely big concerns in the markets, and Reliance falling is definitely adding to the fear on the street. What we'll do is we'll take a very quick break. When we come back, we'll ask our experts on their strategy, at least in the near term, to tide over this volatility. And of course, the all-important question, how will markets open on Monday and how will they perform over the rest of the week? Back in 2 minutes with more on that discussion. Welcome back to markets next week. Jay, let's go to the all-important question right now, because we can talk about RSIs, we can talk about DMAs, we can talk about retracement. What people want to know is how are markets going to trade on Monday and how are markets going to behave next week. I know it's difficult to take a call considering the volatility, but what's your understanding of the situation? Talk to us about your strategy.
Sure, Dipanshu. Now, see, what has happened in today's market is, yesterday we saw that Nifty broke its crucial 200 DMA, right? And it closed below those levels, and it again opened today below those levels. Hence, we were seeing some follow-up selling coming in the markets, Dipanshu. Bank Nifty was the only index which was holding up quite well since couple of trading sessions. Despite Nifty being on the weaker side, Bank Nifty was not breaking its crucial support levels of 24,600, 24,700 levels. Having that got weakened now, I think, and the way the sell-off continued or fall, we saw fall-off selling now. The previous swing support of almost 10,417 on the Nifty has now got broken. Hence, 10,400, 420 is now going to act as a very crucial resistance. Till we don't see a close bit above those levels, a bounce back from these levels shouldn't be expected. If at all we see a bounce back above the levels or close about 10,420, yes, then we'll see a rally at least coming, or a retest of the 200 DMA again happening, which would thereafter come to around almost 10,750, 800 zones, right? But for that, Nifty has to close about 10,420. Failing to do so, Dipanshu, I would say that this fall will continue on the lower side till the levels of almost 10,100, which is the next swing support.
All right, that's Jay's view. Essentially, Ashish, just elaborate further on that point, because the sentiment has turned bearish. In the near term, you've given us your slightly longer term view, but people want to know what happens next. What is the next level I need to watch out for? So talk to us about Nifty, talk to us about Bank Nifty, and of course, any stocks that should be on the radar.
See, first I would say that avoid any bottom fishing. Yes, you will feel as if that markets has seen a very sharp correction. There is a possibility you might see a 100, 200 points pullback, and that will tempt you to that you might have missed this rally. But just don't go by that rally, because honestly speaking, now till we don't see a clear close about 200-day moving average, all rallies are going to be very short-lived in nature. So what I would suggest is that if next week, suppose if market gaps up on the open on the higher side, then ideally if it comes around say 10,450 kind of zone, 10,450 to 550 should be used to reduce your long exposure. If you're aggressive trader, ideal area to short positions would be around 10,450, 500 zone, because there the risk reward become more favorable. You can keep 10,700 as your positional stop loss. And on downside, I'm expecting once we see a clear breakdown below 10,250, the first level to watch out would be 10,000, which will be a psychological support for the market. So that will be a very short-term target. Once 10,000 is breached, then I think as I mentioned, 9700 is something which I am expecting on downside. So what to do at 10,300, I think one should avoid taking any bets at these levels. Let other market see some recovery towards 10,450, 500 to create some positions, or wait for a clear breach below 10,250 to initiate any aggressive short positions. So that is from Nifty perspective. As far as Bank Nifty is concerned, I think Bank Nifty has also given a breakdown in today's trading session, and I think now Bank Nifty can see 23,800 to 23,500 kind of zone in days to come. So what's the right strategy? If you create a position in futures, there are probability that the stop losses might get hit, because the volatility is of 200 points. If it moves up, you might get caught on the wrong end. So ideal way is to create a bear put spread in Bank Nifty. So what should be the strategy? Buy 24,200 strike price put, and to cover the cost, sell 23,800 or 23,700 based on your comfort level, so that you can stand on when there is a short-term volatility into the market, because the broader trend of the Bank Nifty and Nifty is on downside. So you should try to create your positions in such a way that after 2-3 days of recovery, if the market eventually comes down, you should end up making some money.
Point taken. Point taken. So don't get excited by a gap up opening. You may see a minor pullback, but that should essentially be used to go short if you're looking to trade this market. Saurabh, let me turn the argument around and ask you this. Forget what's happened in the market so far. For those who are looking to build their portfolio, or rather rebuild their portfolio in the current market, large caps like RIL now at 1,000, Bajaj Finance at 2,000, Maruti at fresh 52-week lows. I mean, are these attractive entry opportunities for those who may have missed the bus earlier, or do you feel that the sentiment is too negative right now to take a bet, even if it is on some of these quality blue chips?
I think we have to look on the stock specific basis. If you look at the automobile stocks, especially four-wheeler stock like Maruti, they have been falling since we are seeing some gain in the crude prices. And again, I think there would be some moderation in the growth numbers. We have seen in the last 2-3 months that the growth numbers of the companies like Maruti have been subdued, and that is why the correction can continue for a while. Talking about the Reliance industry, I think this company has always maintained the GRM, and it is not the oil story now. It is the big consumption story, the geo story, which will get unfold in the next 2 years. I think Reliance industry in this correction makes sense to accumulate. Talking about in a week's time, we will enter the earnings season, and I think the positive surprise can come from the information technology packed pharmaceutical stocks. I think US is doing pretty well. We may see good earning expectation coming from the TCS, Infosys, and the some mid-cap IT companies. Some pharmaceutical companies may come out with the good guidance. For example, Dr. Reddy's and Pharmaceutical. So these are the stocks which investors can get into in this correction, and actually it will make sense from the investment point of view.
Okay, so essentially it may not be a bad strategy, and that's pretty much the consensus view coming in from Jay, Ashish as well as Saurabh, to sit on the sidelines right now if need be, and wait to deploy that cash rather than getting excited about valuations or beaten down names, or as Ashish also said, avoid bottom fishing at the moment. That's very, very important. The nature of the market, extremely volatile at the moment. The hit has been severe. The sell-off has been very, very swift. What you lost in the entire month of September, you've lost in just 1 week of October. So essentially, stay away, stay quiet, sit on cash if need be. There would be opportunities coming up, but maybe now is not the right time. You may get caught out on the wrong side. Jay, Ashish, as well as Saurabh, thanks so much for your time. That's all the time we have on this edition of Markets Next Week. Be careful with your investments out there. Keep watching Business Television India for the best market advice. We'll be back on the other side with much more programming.